Up? What is up? Tuesday. Tuesdays are usually down days. I'm going to look at Bitcoin really quickly, what I expect it to do. This is on the daily chart. My cursor is on, I want to go to Friday. Friday close was 103.275, which means Saturday and Sunday bailed us out. The Gaussian channel was about, I think, 103.414. I covered it in another video on the weekly, the Gaussian on the weekly. So this is the daily. So we had to close the weekly above the Gaussian channel, which we did. We got Saturday and Sunday, we got a nice close there on bailing us out at 104.705 above the weekly Gaussian channel. But I'm showing the daily chart because we created a weekend gap. So I expect the price to fill that gap like it always does. Fills the gap. So we're seeing a little bit of a pullback to 105.3. I'm short right now on Rollbit. I'm short from 106 and some change. So that's good. But I'm not, I'm not swinging big. I'm just hedging and looking out for the immediate future, trying to make some yield on investment. But what I really wanted to talk about today was opportunities. So I wanted to look at more over the S&P versus, this is the XME, this is the metals and mining ETF, and talk briefly about why metals and mining, in my opinion, is going to outperform in the next 20 years. 20 years, that's right. If we go back in the last 20 years, we'll just round up to 20. We'll say 18, right? Since the low, the November 2008 low, which was the real estate and global financial crisis, since the low, commodities are up around 500%, but they've been pretty choppy until around 2021. If you go back, if you look at 2008 to 2021, they had 0% return, right? Zero, okay? And that's over 15 years. Now, commodities and stocks, usually, they can correlate, they can go up together, but usually there will be some crossing point. And what I mean is, this was quite bearish from 2008 to 2021. I mean, even if you take the tops to the bottoms, you have a 15-year bear market in commodities with a bull market that just started right there. There's your bull market. And commodities stays a bull market for 15, 20 years. Just like stocks have stayed in a bull market for 18 fucking years. 18, straight up. Straight up. And so stocks have outperformed by a large margin, 1,000% in 18 years. It's a very good return. It's not going to last forever, ladies and gentlemen. Stocks, bonds, commodities, real estate, it's all cyclical. So I'm not looking at the past, I'm looking at the next 20 years. And in my opinion, commodities are going to do what stocks did in the next 20 years. It's just going to go up and up. Why? Fundamentally. So this is technical analysis. Fundamentally, commodities make the technology that is going to be pivotal in the economy, such as AI, software, chips, hardware, robotics. This new normal, this new economy is going to be fueled by metals and mining, commodities. So you're going to have something that looks like this. You're going to have something that looks like this. There's going to be a crash somewhere, right? That's going to take everything down. But over the long term, it's going to look like that, for sure, because that's cycles. That's market cycles. And the S&P will probably come down a lot, right? It's probably going to have some crash somewhere and look like that. Go more sideways, just like it did from here to here. Look at that sideways action. That's 8 years of sideways. So the S&P can do that. Most people don't see the S&P doing that because the last 18 years, you're a Gen Z or Gen Millennial or whatever. You think the stocks only go up. They don't. When they get too overvalued on a PE level, they'll come down and they'll stay down. And they'll be boring for a long time. And that's where I'm looking for commodities to take over, because commodities are not the derivative. What I mean is commodities are the first layer of production. Stocks are the derivative. Stocks are the companies that use the commodities to make the products, the Apples, the Google Androids, the Tesla robotics and phones, and self-driving cars, and Microsoft software, and Netflix bullshit, Netflix flixes. you know, the streaming service. They use the commodities into their business processes to make, so the derivative is the stock. The raw performer is the commodity, and that's what's going to be bid up in a permanent stagflationary or inflationary economy in the next 20 years. So that's what I wanted to say. I hope you got some value for that. I think commodities are an excellent buy. Metals and mining, you can track them. It's the State Street Spider. It's XME is the ticker. And then you can come in here and look at, well, what's in the XME? Maybe I can buy some stuff in the XME. You can buy individually. XME is an ETF, so you can look at these companies, do your own research. I'd rather just hold the ETF and let these companies work for me. MP Materials, which is also in the ETF Remix, REMX, which covers rare earth, which is a very, very important commodity. As you see on the news, Trump and Xi Jinping arguing about rare earth, and trust me, these guys need rare earth. And that's part of the metals and mining story. So if you have any questions, leave your questions in the comments. I can generally answer them. Otherwise, I hope you enjoyed the video, and we'll see you next time.